Today I was asked, will you take a look at these four companies that I own in my portfolio? I'm wanting to make a decision if these companies are going to rebound anytime in the near future and if I should hold on to them for the long term. So I said, sure, I'll make a video about it. It's four companies. Let's go to it. First off, this is the S&P 500 weekly chart. And what I'm looking for is I'm using a broader index, such as the S&P, to make a decision on where is the overall money flow of the world going to when it comes to US companies. In this case, the S&P 500, it's a great example. Most people are familiar with it. I'm using two indicators to determine what direction the S&P 500 is going on a weekly chart. I'm using the 200, which is the red line, and the yellow line is my intermediate trend line, which is a quarter of the trading days of the year. And what I see here on a weekly chart is that the S&P 500 is below my intermediate trend line, which is cautionary, which is if I'm fully invested, I am possibly taking money off the table if I own the S&P 500 outright. Okay. 200-day, it is still above it, which is good, but I want to make sure that there is confidence in the underlying indice, the S&P 500. I want to see confidence in the country that it originates from, and I want to see that the majority of those companies in the S&P 500 are performing well. So I'm looking at this going, I'm in a cautionary state. The S&P on a weekly chart is above the 200, which is if it's below the 200, nothing good ever happens really well under the 200. But it's in between the intermediate and the 200. So when I look at this, I go, okay, on a weekly chart, I'm in a cautionary stance. On a daily chart, though, I've broken through my intermediate trend line back in February 24th. I then broke through the 200 back on the March 10th. And I've toyed with the 200 back on the 26th of March. And then I sold off, or the S&P sold off. I didn't sell off. The S&P sold off. And it's coming up to, once again, another level of what I believe is resistance. And that is right at this mark that it's trading at actually today of right around 5,500 on the S&P. It's been there once, twice, three times. Well, three times you're out if it doesn't break through and close above. I don't see that happening today personally, but that's my opinion. And we've got about 30 minutes to go in the day. This is April 24th. I look at this and I go, on a daily chart, I believe there's more pain to come. And I look at what's happening on a geopolitical standpoint. I look at the global landscape and I say, when those things aren't working in tandem and they're not working in a positive upward fashion, then things get really hard for stocks to go higher. Doesn't matter what sector you're in, if the overall global economy, the macro picture is failing and there is conflict and there is no confidence in global markets, then I am cautionary at this point. So S&P 500, I don't think so. Let's go look at the four stocks now. The first one is Comfort Systems. FIX is the symbol. Comfort Systems has ridden the intermediate trend line since October of 20, bounced below it a little bit, but didn't break through it and close below it until March 3rd of 2025. Since then, it is hit on a weekly chart. This is a weekly chart. It's hit at 1, 2, 3, and now this week it's a little above the intermediate, but the week isn't over. We got one more day. Is basically 4 times it has tried to break through the intermediate trend line. That's a cautionary sign. If you can't get a weekly close above this intermediate trend line, like we saw back here, back between June 6th of 2022 and the week of July 18th, 22, if we don't see a close above that here soon, then I'd be concerned that Comfort Systems is going to head towards the 200, which is at $199.41 today. Caution. I've got caution written all over this already. When I look at the daily chart, I look at it and I go, well, we broke through the intermediate trend line once back on June 27th of 25. We came up, we retested, made an attempt on February 7th of 25, and then it gave up and went down. Broke through the 200 back on February 21st, 2025. And since then, it has had 1, 2, and it looks like we're trying to make a third attempt in the next 2 days at the 200, which sits at $388.14 on a daily chart. This here, my intermediate trend line crossing through the 200, is my version of a death cross. When that momentum is continuing to fall, it's going to take an enormous amount of energy and conviction and confidence in Comfort Systems to get back over the 200 and bring that intermediate trend up. So right now, when I look at this in the short term is 15 days, 15 trading days. If I'm looking at from an intermediate trend line, if I see a close again today or Friday below this intermediate trend line, this is a no-go for me. I would not be buying Comfort Systems or adding to my position. Would I be preserving profits? I'd take a little off the table, but that's not advice or recommendation. That's what I do. This is my system. You have to have your own system when you look at these things. So let's look at the next one. This is Navitas Semiconductor Corporation. This is a weekly chart. As you can see here, this 200-day, there hasn't been enough 200 days or 200 weeks for Navitas to have a 200-week, a long 200-week moving average. So that it's a young company. So it's a weekly chart. My intermediate weekly trend line, or to 62 weeks of the year, it has broke through that, well, back here in October 2nd or so of 23, has made attempts, broke back through it on the south side on January 8th of 24, and has continued to slide. Came back up and made an attempt on December 24th, or excuse me, December 9th, 2024, hit it 1, 2, gave up, and has been selling off ever since to where it is today at $2 a share. Is this company significant when it comes to the whole AI revolution? Yeah, it could be. But right now, if I'm buying this initially, I wouldn't touch it. Why wouldn't I touch it? Because the momentum since July 10th of 2023 has been negative. I can draw a line. Let's get our drawing line pencil out here, folks, and go to school a little bit. If I just draw a simple line like this, boom, what do you see? I see a downward long-term weekly downward trend. For me to get interested in this, I want to see a break above at least 370, and really can be convicted. I want to see a break above the 200. But oh, Trent, oh no, I would miss out on all that gain. Or would you possibly not miss out on that gain because you got up here and then it tanked back down towards $2? I don't know. What I want to see is the street has conviction in this company, and that the street is going to say, I'm willing to put money behind this, drive it through to $6 and at least 50 cents, and get above the 200 and confirm that, and then start moving higher. Is it the environment we're in? Is it the economic conditions and global macro that's driving this? I don't know. And that's where you have to dig deeper into this. You may come to me in 24 months and go, it's a $200 stock. But you know what? Today it's a $2 stock that's headed south, has been failing, that has had lower lows and lower weekly highs. Let's look at a daily chart of this. What do you see? 200, that's this, this line is that trend line I drew. This is the 200, this one here, that red line. Let me just turn that color to, well, sort of a pinkish color. So it's not totally red. And so that's our trend line we drew on the weekly chart. This is our 200. Boom, made an attempt. Boom, failed. Down, hit the intermediate. Boom, went back up, made an attempt. Failed, hit the intermediate trend. And then in February 21st, 2025, just remember, the entire market on a daily chart has basically given up its intermediate and 200-day moving average on the S&P 500 around this same time, and everything sold off. And it has continued to sell off. When it broke it on February 21st, 2025, it was trading at $3.17. It has lost $1.17 as of right now, $2 a share. The question is this a trade? Is this an intermediate investment, or is this a long-term hold? When I look at this, I look at it and go, there are more trade opportunities, in my opinion, out there. There's more companies that I would rather trade. On an intermediate standpoint, I'm out. And on a long-term standpoint, I'm out until we see a break above what I believe was $6.50 on the 200 on the weekly. Do I get excited about this stock? Let's look at the next one, SoundHound. Now, this is a company that was brought to our attention by our founder, Kerry, and it is basically voice activated ordering systems, that kind of thing. I think I will go to more brick and mortar restaurants in the future, and there will be nobody in them who's maybe one person, a manager, and I will order everything through a kiosk, which SoundHound does some of this. I will eventually, at some point down the road, I will eliminate the human factor when it comes to ordering things and doing things a similar sort, and SoundHound could be a big part of that. We don't have a 200-day week moving average because we don't have 200 weeks because it's a young company. And so when I look at this, I look at that intermediate trend line. It has come down, broken through back on the 7th of April, the week of the 7th of April, the week of March 31st, broke back through it and closed above the intermediate weekly trend line. It's toyed with that area, and we're still in this area. Is this something I would consider? I would consider it. Yeah, maybe I start dabbling a little bit. Maybe I start building a position. If I'm running a 12 stock portfolio, equity portfolio, I would allocate my full allocation per each 12 positions would be 8%. Maybe I would buy 0.5% or 1% at this level. As long as this weekly candlestick stays above this intermediate trend line, I'd start dabbling. But I understand also the bigger picture, the S&P 500. Maybe you should look at the Russell 2000 as your benchmark on this. And I would say there is still a high probability of risk and SoundHound going below the intermediate weekly trend line. But right now, it's showing signs of positive energy movement higher, and this could be a bargain at some point. But I'm cautioned. I don't allocate the whole farm. I don't take out my wife's 401k or my kid's inheritance and buy SoundHound 100%. Now, maybe a 0.5% of my capital, maybe 1% at the most right now. I want to see the big picture get better. I want to see more confidence in the market. Let's look at a daily chart of this. All right. Well, on a daily chart, we do have a 200. And today, if we close above here at 2:35 Central Time, April 24th, if we close below there, we're above the 200. We've gone through it back on March 28th. We've gone sideways. We hit it once back on April 9th, again on April 14th, failed. And today we're making a move. Maybe it's because we got earnings season coming up here on the 8th of May. Maybe somebody knows something. I don't know. But what I see here is a possibility. Would I be adding to this today? Maybe not, because I want to see a couple closes above that 200. And then I would love to see a close above the intermediate trend line over right now, which is 1042. See, here's the thing about me. I don't care if I miss out between the 200 and the intermediate trend line. That's roughly just rounded up to $2. Okay. So if you bought 100 shares of it, that's $200 I'd be missing out on. That's peanuts. What I'm looking for is confirmation, confidence in the stock, in the overall, the bigger picture, the macro. And I want to be able to buy it. Hell, I'll buy it at 12, fill this gap here that we have. I'll rather buy it at, say, 13 so I can ride it up to 27. Or if I'm a really long-term investor, I could ride it up to who knows how far this could go, depending on how it fits in the overall evolution of technology that we're seeing today. So I like SoundHound. I think it provides a great product. But if I'm adding to it, I'm adding in small increments up to my max allocation of 8%. I'm only going to hold 12 stocks in my portfolio because that's all my brain can handle. And I want companies that are on the move, and I use risk management strategies like I show you here to say, hey, it's not working. I'm out. That's how I preserve capital. But this could be one of those. But I want to see, in my opinion, if I'm initiating a buy, I am willing to miss out on basically $3, $4 worth of upside so that I can have a secure, confident position. If I'm adding to this position because I own it, I am more confident in this SoundHound than I am in some of the others right now when it comes to if I'm holding this. All right, last stock, Netlist. Well, this came to the surface because a tribe member talked about lawsuits. And that person no longer is part of the tribe anymore because I heard it was a pump and dump. Netlist is all about a lawsuit between it, Samsung, and Google. I don't know the state of that lawsuit. I don't know the significance of what they're doing as a company, but the focus on this company has been pretty much at least 90% on winning a lawsuit against Google. Market, there, I was told once when I was just getting into business, they said, you may be right about a stock, but the market can outlast you because you don't have the capital to outlast the market. And that's sort of what I think of Netlist. Netlist can pound the door and go after Google. And let's say they won all of their lawsuits. Now it then comes back to what does this company do? Well, they're still doing what they're doing while they're suing these other companies for patent infringements or stealing their ideas. But it's a 90-cent stock that is just trades on lawsuit news. It doesn't trade on we had earnings per share growth, we had revenue growth, we reduced debt, we're a merger acquisition situation. We're not building a new product that's challenging somebody else. We're not hearing about that. To me, long term, that's what you want to buy. You want to buy companies that are going to innovate, they're going to change, and most importantly, they have the financial wherewithal to stay afloat in market conditions like we're experiencing now, like we experienced during the pandemic, the great financial crisis, the dot-com bubble. Go all the way back. If your company is financially sound and can withstand these market downturns fundamentally, then you're going to outlast probably 50% of the companies out there in your competition. Netlist, on the other hand, below the 200, if I'm just looking at it from a trading standpoint, it's above the intermediate. If I'm looking as a trader, and this is a daily chart, it's bouncing between these two lines. You could make a trade here. Maybe you got to look at some other indications. You got to look at volume increase. You got to see maybe if there's something coming up, they'll pump this thing back up to $1. You make 10 cents a share. You own, thousands of shares. You could day trade this or week trade this. But overall, as a company and a stock, it's below the 200. I'm cautionary. Let's look at the weekly below the 200, below the intermediate trend line. I would not start a new position, and I would not expect to pay my kids' college education on this stock. That's my honest opinion. So that's my summary of what we have going on. I'm looking, starting again, the big picture. What is the S&P 500 doing? What is the Russell 2000 doing? Are they above the 200? Are they above the intermediate trend line on a weekly and daily chart? That's sort of my big picture foundational starting point. I then start looking at the companies. I look at the weekly and then I look at the daily. And if I'm just using the 200 and the intermediate trend line on both weekly and daily, and that's all I'm doing, simple process. I simply can look at it and go yay or nay. And if this happens, if it goes below the intermediate trend line, but above the 200, maybe I start peeling off a little bit of my 8% full allocation. If I hit the 200 and I go through the 200 and I close there on a daily basis, maybe 3 days in a row, and I keep up bouncing up against it and it fails and fails, then I take my position down to say a minimum of 1%. So I do have exposure if the stock does come back. But more importantly, the fundamentals. Do I believe this company is going to do something really cool? Is it going to grow? Is it eliminating debt? Is it growing its earnings per share, its revenue? Is its margins growing? Are they dominating their sector? That's why you only have to own 12 companies. And when all of those companies fail, like on the 12 right now, our crypto portion, which is five largest market cap crypto stocks, we've got three that are meeting our criteria right now. But it's because, and I know it, is because money is looking for value. And recently it's found value in crypto. But the other top seven, which are the largest market cap stocks in the S&P 500, those companies are not meeting my criteria. So I have a minimum allocation of 1% to them. They're great companies, but they don't meet my technical requirements. So when you're building your process and you're looking at your companies, number one, take the man who's in your head. I deem that, give credit to my dad about that, Kerry. The man in your head, tell him to go off. Okay? Tell him to go somewhere else. Go get some lunch so I don't have to listen to my emotions. Two, I have a written process, a process I believe in, and I religiously stay to it. And three, I look at my charts, I look at what it's telling me, I listen to the earnings calls, I look at the big macro picture, I use the S&P, the Russell 2000, and really the global geopolitical situation. And I make those determinants, positive or negative, positive or negative. Oh, if that's negative, geopolitically, negative. If inflation, negative. If S&P below the daily 200, the intermediate, negative. Okay, I got a lot of negatives there. Now I'm going to go look at my stocks. Ooh, I'm going to sit on the sidelines. I'm going to, as Mark says, I'm going to just pop some popcorn and I'm going to watch the show until those indicators start saying positive, positive, positive until something indicates it's time to get back in the water. The sharks are gone. I can get in safely, and my family and I can now continue our road to growing our wealth. That's what we do at Best of US Investors. That's what we talk about on the Morning Edge every morning, Monday through Friday. That's how the 12 portfolio is designed. Platinum includes all of that. It's $60 a month. It's a gem. Plus, you get swing trading ideas, coaching coaching. You get all this stuff in the Platinum channel. But you can get you can get into our community for as low as $10 a month. And that's the Edge. If you want to just do the Morning Edge, which is 7:30 Central, 8:30 Eastern, Monday through Friday, it's a 45-minute to an hour show. We talk about markets, we talk about swing trading, we talk a lot about macro investing, we talk about long-term investing, we talk about what's really happening as a community, and everybody contributes. It's not just my opinion or Mark's opinion, it's everybody contributes. And that is the really cool thing about the Morning Edge. The 12, it's my creation. It's the top market cap equity stocks in the S&P 500 and the top market cap stock crypto currencies in the crypto world. I couple that. I have a process. Every morning I send that out and updates on that. Gold, that's Kerry's baby. Kerry is a fundamental investor. He does such deep investment research. And for $29.95 a month, you get that. You get the Morning Edge in the morning, and you get his Friday call. Plus, I send out a newsletter with some commentary written by myself about the stocks within his bus portfolio idea list. I just can't explain any more about how much value people are getting, and we're hearing it. Thank you. The most common thing is thank you for telling us the truth about markets. Sign up today. The description or link in the description. Check it out. If you like this video, hit the like button. Leave your comments. And in all that you do, take care of your family, take care of your wealth, protect yourself, and be realistic. Tell yourself the truth. If stock is going down, it's going down. But you don't have to bleed out with it. Just remember that. All right. Y'all take care. Have a great day. And whatever you do, always, always live loud. See you.